I just sold that close. I'm gonna move my stop to my entry now because just exit. Um, so my reasoning for selling the close is similar to. I'll try to find all the examples that I showed in the other trade as well, but it's essentially when it's a tight trading range or high in a trading range. Um, this double bottom bull flag has a big signal bar, but the sell off before it is really strong. So it probably need a micro double bottom. But instead of getting the micro double bottom, it rallies up in two legs. So first leg and then deep pullback, second leg. That's usually not um, a strong enough setup for a continued rally because of the sharp sell off right before it. At least in the examples that I found and the examples that I'm going to try to find and show. So usually, if it is going to break out, it needs to pull back here first and form a flag, and so usually the outcome from this kind of setup is that we either pull back here and then form a buy setup down here, or that we get a doji and then continue higher. But the doji is just a type of flag on a lower time frame, and so if I see that we get a doji and it just holds up here near the highs, then I just exit, or it pulls back and gives me enough for a scalp. So it's usually enough to get out break even, worst case, um, or get out with a scalp. Like obviously, there's a chance of getting stopped out, but in most cases, I've noticed that it's a doji to get out break even or a scalp out. And I'm risking. In the last time I did it, I risked a few points or 20 cents above the highs. And this one, I realized in the last trade that I want to start doing it as just a one-to-one. So just risking as much as I'm potentially going to make. That makes the math more clear, um, and it makes me feel better about it. Just because it's something that I'm working on right now. That if I see something that could be better or it's a flaw in it, then the math makes it more palatable. It could just be I lose what I make, and so if I lose one, I can easily make it back, and I don't have to worry about it being 80% certain. So it's most similar to this example here, which is a flip chart. But so here we have double bottom bull flag, tried to break out, created a low one sell, or you can see it as a second entry sell, first sell and second sell. But it failed and broke out to a new high. But even with the breakout and the trap bears, because of the big up, big down, I've noticed that even this can be sold for a scalp because it needs to pull back first before going higher. Either get a doji for a flag or a pullback. And so that's what I did today. There's a double bottom bull flag, sharp rally, sharp sell off for us. You can see it as a low one or a second entry sell. And then we break out above the high, above bar one, or this is a bar four high. And I thought there would be sellers there for a scalp, especially because we were also at yesterday's high and the top of a trading range from yesterday. So I felt more confident about it. And so I ended up making 750 on it, 30 shares, and 25 cents. I have an order to buy above this bull bar, just got filled on it. Trading range open, consecutive climaxes down. So and really strong reversal up from the high from 2 days ago, which is top of the range right here. So it was a bounce off this high. I'm looking to take half off at 50 cents. I got out of half there, so I got out of 5 shares. I bought 10 shares above this bar. In these kinds of situations, I usually use a measured move stop, so I don't put my stop below this bar. I put it below a measured move of this bar. But then if we get a strong reversal like this, I change my stop to below the bar, because once we get the strong move up, then I'm not interested in using a wide stop. It's only if the signal doesn't work, and we come straight back down for another climax. But once we get a rally from it, especially a strong bull bar like this, well, I mean, if it closes like this, then I move my stop to below the signal bar. And so that's why my size is a little bit smaller than I'd like it to be, but because the signal bar is so big, so I have a pretty wide stop. My order to get out the second half is below the sell climax, below the high of the sell climax. But if we start to stall on the way there, then I'll take it off. But right now we have some pretty decent bull bars, so I'll keep it on for now. But similar to August 18th, and my concern was similar in the sense that my sell limit's up here, so it's a little bit skewed, distorted. But see, here we have climax, climax, and then a bull signal. And so that was equivalent to today. The only difference that I saw, and here I didn't buy above here, I bought above the third one. But today I bought above the second climax, but the context, I saw the context as different. So here we had the first climax, but I saw this as the initial range, and then climax, pullback, consecutive climax, and then I bought above there. I also saw it a little bit differently here because this climax was much bigger than the first one. So I thought it might need its own second leg, so I did not buy above there. And the follow through wasn't significant in terms of having a bull bar closing on its high. But I think even if I had bought above here and got stopped out, I think that's an okay trade because it is still 2 consecutive climaxes down. But I thought it wasn't as strong of a setup. Today, I saw this as the initial range, and then we had one climax pullback, second climax. A really good signal bar. We're also at the bottom of this, so you can see it as 3 pushes. But I was actually looking at it as a bounce off of this high. So because of the trading range price action early, consecutive climaxes, I thought today was a stronger buy above the buy signal. But that was my concern, my reasoning for scalping out 5 shares here is because even with the second bull bar, like we had the other day, it could still go outside down and need one more climax. But the strength of this, the strength of the move up on the entry bar as well, I thought decreased the odds of that. I ended up getting out break even on my last 5 shares when it came back down to my entry a second time. So it came back down here on this bar and then reversed strongly up and then came back down again on this bar and it was coming down outside down, testing it again. So I exited break even there, thinking that if we rallied and created a big tail on the bottom and closed in this area, I would add it back. But the tail, the market rallied all the way up here and the bar closed up here, so I didn't want to add it back this high. So I decided to just stay out of it. But my reasoning for exiting break even here is similar to what I talked about in the example on August 18th, is that I think it was wrong to do that today. But here we went outside down and then ended up getting a new low. But this is not nearly as strong as today. It's just that it tested my entry twice, and it was coming down outside down pretty aggressively. So I thought it'd be better to get out break even, see if it bounces, and then re-add. So yeah, I messed that up. That should have been a non-exit. I just had that example imprinted in my mind and saw it coming outside down and thought I'd rather get out, see how it closes. But because it closed all the way up here, it didn't give me an opportunity to get back. I mean, I could have bought this close, but now I'm just buying at my first exit way higher than I was. So I mean, if the target is up here, it's still worth it. I just couldn't think quickly enough to do that, to make that call. So context was different today. 3 bull bars, probably buyers below. I messed that up. I shouldn't have exited break even there. But just that example and the two tests of my entry price I didn't like, so I missed out on that, and that reached my target. So that was a bad exit. So made about 250 on that trade. 5 shares at 50 cents, and then the other 5 shares I got out break even. So 250 on that trade and 750 on the first one. So about $10 on the day, $9.94.